So with consumers spending about 70-ish% of the overall economy, where does all this go? Let's talk about it. Michelle Meyer, she is the chief U.S. economist at the Mastercard Economics Institute. Michelle, perfect person to have on today. And these numbers are scary, but we don't care about the macro numbers. We care about what people spend relative to their income. It's called debt service levels. On that, how are we doing?
So I would argue that the numbers aren't that scary because you have to think about the January retail sales numbers in the context of the broader trend. And what we saw in the Census Bureau data and in our own figures as well is strong spending throughout the holiday season. We know that the start of the year always has very strange seasonality. So the January numbers, when you're looking at a month-over-month change, have to be taken with a grain of salt. And then on top of that, we had really strange weather issues. Of course, the terrible fires in LA, the snow in the southeast, and that created distortions as well. So I certainly think that if you look at the moving average, taking into account the strength at the end of last year, this is a consumer that is still very much participating in the economy and spending.
It really, honestly, Michelle, it's nuts. And I mean that in the best possible way. Everywhere you go, I fly all the time. I try to go out to eat, whatever. Everything is full. The planes are still full. The airport is full. The restaurants are full. It really is remarkable, especially when you look at 1.1 trillion or whatever in credit card debt. Nobody seems to care.
Well, I also think that the fundamentals are supportive. Look at the labor market. That's a stat that we didn't throw out there, but you have a 4% unemployment rate, job growth averaging well above the underlying trend that we had seen before the pandemic, wage growth running above underlying price inflation for goods and services. So that's real purchasing power. So you have fundamental support for the consumer right now. And I think that's been a big story that supported the economy throughout last year with 2.9% GDP growth potentially. We'll see where Q4 in the final release ends up. But it's above trend growth that we've seen for the last few years and an above trend consumer spending trajectory.
Now, I don't know where you are, Michelle, physically, but around, in the New York, New Jersey area, if you commute to work 5 days a week, it's probably $500 to $1,000 a month to commute. I mean, it's really expensive. You got tolls, trains, planes, automobiles, the new congestion pricing. It's that way in a lot of America, too. If we see a huge force, a push back to the office 5 days a week, that's going to people are now going to have to spend money on gas and the metro in D.C. and not at a restaurant. Have you been able to calculate how much that might matter, if at all?
Yeah, I think consumers are always balancing their budget and their priorities. So when you think about the COVID period, the pandemic, when we were all in lockdown, you didn't travel for either leisure or for work purposes. So that meant that people were able to buy on things for their home, furniture. They renovated their houses and they bought on all these more durable items. And then as soon as you had the reopening, it switched pretty dramatically towards experiences again. So I think the consumer is nimble. The adjustments are always happening. This might be a new one in the sense of going back to the office in a more sustainable way. And that probably means that instead of going out to eat dinner maybe on a Thursday night, you're going to grab a lunch with your colleagues and you're going to shift around when you go to restaurants and how you spend on some of those leisure activities. But I think, again, it's a consumer that's had a lot of choices and, again, has navigated that very well in the past few years.